Hello, everybody, and welcome to Fully Covered. Do you want cheap insurance or to be insured? This is brought to you by Absolute Insurance. I am here once again with Jeff Eastfold, President and CEO, and Dan Bell, his Vice President. How are we doing today, guys?
Doing good.
Wonderful. How are you doing?
I'm doing awesome. So now that you got my head spinning from our last episode on homeowners insurance, let's just see if you can put me into a total whirlwind. And today we're going to be talking about what auto insurance really covers, as far as liability, collision, comprehensive, and you're going to explain all that to us. So today's big question is, what is the actual difference between liability, collision, comprehensive, and other insurance components, and why do I need each? So let's start out with, what does auto liability insurance cover, and why is it required by law?
Well, your liability insurance covers your bodily injury. That's if a person gets hurt, is bodily injury. Now, the state of Iowa only requires 20,000 per person, 40,000 an accident, which is,
Ridiculous.
yeah. And property damage, which is the other people's cars, is only $15,000. That's what's required. Look at the cars out on the road. You could throw a ball, and probably every car you're going to hit is going to be over 15 grand for the most part. But so that's why we always advise people to go at least 100,000 per person, 300,000 per occurrence, with 100,000 for property damage. Your other coverage would be medical payments. That's per person inside your car. State doesn't require that you have that, but you should have that, because even if you have health insurance, you're still going to have a deductible co-insurance. Might not cover your ambulance ride, that kind of stuff. So we usually do about 5,000 for that. Then you have uninsured and underinsured motorist. In Iowa, that's only for bodily injury. That's if somebody hits you and they don't have any insurance, or not enough insurance to pay for your medical bills, loss of wages, pain and suffering. I think last time I read that 1 in 8 drivers in Des Moines do not have car insurance. So, and typically those are the ones that are causing the accidents. So you definitely want to have them. That's really inexpensive to have.
Yeah.
And then your next set of coverages would be what covers the car, your physical damage. So you have comprehensive, which is wind, hail, theft, vandalism, hitting a deer, hail. I don't know if I said that. And collision is someone's hit, a vehicle's hit. There's an impact. You ran into something. Somebody's ran into you.
You swerved, you missed the deer, and you hit a tree. Now you've had.
Yeah. So you're getting me right into my next question. So when you're talking about collision and comprehensive, let's kind of dive into that a little bit deeper. What does collision coverage pay for, and when does it apply to my vehicle? So let's go with collision first.
Yeah. So collision is going to be that scenario, just like we said. So you're driving down the road, deer's in the road, you swerve to miss it, you hit a tree, you hit a car, you hit a person, you hit a building. It has an impact, right? That's when your collision coverage comes into play. Then you'll pay for the deductible, and the insurance company at that point will pay to either repair the vehicle or total the vehicle. And then there's other endorsements that you can add to your auto policy depending on the how new your vehicle is, in terms of like total car replacement, or you can have things called guaranteed purchase options, whereas you're going to get paid what you paid for that vehicle if it's deemed a total loss at the time of loss. Now, there's also other endorsements you can add into this collision side of it, and even the comprehensive, but we'll get there too. Whereas, let's say you have a loan on that vehicle, and you actually owe more on the vehicle than what the vehicle is worth at the time of loss. This is what we call loan or lease gap coverage. That's going to cover that gap between what I owe and what the vehicle's worth, right? But that's going to be your collision coverage. And then when you get into comprehensive is now going to be your fire, theft, vandalism, contact. I say contact with an animal because you don't have to hit a deer. The animal can hit your car or just make contact with your car. For instance, mice eating the wiring inside your vehicle, which happens. This stuff happens. Mice eating wiring in your car. That's under comprehensive. You pay your deductible. The insurance company will pay to repair or total the vehicle at that point.
Perfect. So you kind of explained the difference between comprehensive and collision. So what if somebody breaks into my car?
Comprehensive.
See, there we go. See, we're learning. We're learning.
Yeah. Now there's some nuances to that too. So you get into somebody breaks into your car. Now, what are they doing? Are they stealing stuff out of your car? So if they get into your car and they just do damage to your vehicle, that's your auto claim.
Okay.
If they steal your suitcase out of there, that's a homeowner's claim because that's personal property.
Okay. See, look at us learning.
Yes. Yeah. So you have two different things that can happen there. I wanted to get back into that liability section a little bit that Jeff had mentioned. You have two parts of your auto policy: your liability section 1, liability section 2 is your physical damage. He had mentioned in the state of Iowa that and actually every state has a state minimum requirement. So what I want to impress upon our viewers and listeners is that these are ridiculously too low, and that for liability, it is the cheapest thing you can buy to protect yourself. Because once you've maxed your liability limit in the claim, the insurance company stops the process entirely, right? So once, let's say they've had, you had 20,000 per person, 40,000 per occurrence, you hit a $40,000 bodily injury claim. They're only paying 20 grand. Where's the other money coming from? From our hide. It's coming from our hide. So we got to protect our hide on that. And the other aspect in Iowa, for sure, if they only have $15,000 in property damage and your car is, 60,000 and they've totaled it, you're now on your collision portion is what I would do. So anyway, protect yourself.
What happened there is, like, if you have collision on your own policy, when it's not your fault, your policy will still pay for your car if you have collision coverage.
Right.
If someone ran into you,
Yeah.
15. Then what the insurance company is going to do is, like my insurance, you hit me and you only had $15,000 property damage. Obviously, that's not enough to pay for a $50,000 car. So my insurance will pay the 50, get 15 from your insurance, and they're going back to you for the 35,000 out of your pocket because you're the one that caused the accident.
Wow. Okay.
And
So what happens if I'm hit by a driver who has absolutely no insurance or not enough insurance, like you were saying? We're kind of getting into that question now.
So your uninsured motorist for bodily injury or underinsured motorist for bodily injury, that would pay for your medical bills, loss of wages, pain and suffering. Won't pay for your car. That still goes back to collision. So if you only have liability only, you get nothing for your car, but your injuries would be taken care of up to the policy limit.
So the next question, you were talking about, all the liability and collisions, and we've kind of, gone over quite a bit of things of what is covered and what's not covered. So guys, what do medical payments coverage and personal injury protection coverage, what are they, and do they apply regardless of who caused the accident?
So medical payments, you can use your medical coverage on your auto insurance. It doesn't matter whose fault it is. It would just pay. Because on your liability, gets into your liability, they don't have to pay until they settle the claim. So if somebody hit you and it's the other person's fault, I mean, you still have health insurance. Hopefully that will pay for the majority of your stuff. Then you use your medical to pay for what's not covered by your health insurance. And then when that liability claim gets settled, the insurance company would be paying the other person's insurance, be paying out of that bodily injury back to you, or to recoup, or for your health insurance too. I mean, health insurance wants their money back also, but they don't pay that until the end.
I gotcha. So, what is uninsured motorist property damage coverage, and is it worth adding in Iowa?
You can't add it in Iowa, but other states have it, like Illinois.
Oh, okay.
Yep.
Okay, perfect.
That's going to be state specific. And again, that's going to be for that situation where the uninsured motorist has hit the vehicle and maybe you don't have full coverage on the vehicle. Well, you wouldn't have full coverage. If you have collision, the collision is going to apply. So if you have liability only, you might have the option to put uninsured motorist property damage on, and it's going to be a little bit cheaper than the collision aspect of it. However, typically in those scenarios, you set a dollar value for the vehicle.
Yeah, like 15,000.
Yeah, 15,000. So it's not exactly what a collision policy is, where a collision is basically saying we're going to pay the actual cash value at the time of loss. So in those scenarios, they'll pay the actual cash value in time of loss, the lesser of the actual cash value or the limit.
Gotcha.
So
No, that makes sense.
$30,000 car.
In those states that do the uninsured motorists for property damage, they have to know who it is. So if it's hit and run, you still have no coverage.
Got it.
Right.
On collision, you do. So hit and runs are another example of when your collision coverage would kick in.
Right.
Okay. All right.
One of the big things too is like we always like to put on rental car reimbursement. So when your car's in the shop being fixed, it's going to pay that $30, $40, $50 a day for you to rent a car until your car can be repaired.
Yep.
Typically, every policy we sell is it's so much a day up to 30 days. So,
Yep. No, that makes sense. I've had
huge during COVID. I mean, cars would be in there for weeks.
Oh yeah,
They just
months.
Yeah. Oh yeah. That was
Months.
Hopefully, we never ever have that happen again. That was insane.
Yep, and I'm gonna just go right past that and say I'm gonna go back to, okay, Dan, you were trying to make a point earlier about minimums, and I could almost see the smoke coming out of yours when we were talking about people who only buy minimum coverage policies. So we're gonna reiterate this just a little bit more and kind of drive the point home. So let's go over it one more time. What are Iowa's minimum insurance requirements? Let's kind of go through them a little bit step by step. And are those limits enough to provide real financial protection? I'm going to let you, because I know you wanted to go back to it, and I'm going to make you smile and let you hit a home run with this one, Dan.
Yeah, this is just there's smoke
Mind
coming out my
boggling
ears
to you.
on this. It's $20,000 per person for bodily injury, up to $40,000 per occurrence, right? So that 40,000 is the max, the 20,000 is the max on a per person. Okay. I don't know. I've experienced hospital bills with my son, and it wasn't even the ICU or anything like that. We were in there at Blanks Children's Hospital for 6 days. We had $100,000 bill.
Yep.
It's super easy to rack up $100,000 bill in a medical scenario. So if somebody hits me and they only have $20,000 in medical, it is exceedingly important that I have uninsured motorist coverage to come in and make up the difference for my lost wages and medical bills. Okay. As a consumer, as viewers, it is so minimal to increase the liability limits from that state minimum to a bare minimum of $100,000 per person and $300,000 per occurrence. Okay. That's still not the end all be all. I still recommend exploring higher limits. $500,000 is kind of where I set my limit at. $500,000 minimum. That's usually the highest you can get. And if you look at the differences between that 100, 300 limits and that 500 limits, it's maybe $20 a month, if that. I mean, it's not crazy money when you're talking about protecting your assets. Because again, insurance is something that is out there. We never want to use it, but my goodness, when I do need it, I want it to come in and help protect me. I'm insulating my future, and that's what I want. I want pillows against my retirement.
Yep. Makes sense.
And then you look at the vehicle scenarios. I mean, this is ridiculous. Look, go out and try and buy a used car anymore. I mean, the 2,000 beater with the heater, $5,000 beaters with the heaters, you can't find them. It's very hard. And we're saying that as a state, we're okay with people driving on the roads with $15,000 of property damage. No, multi-vehicle accident, you're exceeding that in multiples. So it's important that not only to protect yourself from what Jeff had mentioned, 1 in 8 drivers don't have insurance. I saw a statistic from a news source back in 2007 that said 1 in 9 drivers don't even have a license here in Iowa.
Oh boy.
Right. It is important to use these insurance protections to protect yourself. So when possible, explore those higher limits. Make sure you have uninsured and underinsured motorist coverage. Understand what that means. It's not protecting your vehicle. So therefore, then explore the concepts of collision and comprehensive coverage on your vehicle. And, you know, there's going to be a point where you'll say, maybe the vehicle isn't worth full coverage. I get that.
All right, so that's kind of my next question. Do I need collision and comprehensive coverage if my vehicle is financed or if it's already paid off? I already know the answer to this because I was a finance manager at a car dealership. I have about 8 years experience doing that. I know the answer to this one very well, but I'm going to let you guys cover it on when you're required to, when you should, and honestly, sometimes it's, you know, collision and comprehensive aren't that important.
Right.
I'll let you guys kind of, because there are 3 scenarios, and all 3 of those do come into play, in my opinion. Do you agree with me?
Yes. So, Jeff, you want to take that? Or you want me to run?
So if you have a loan or lease, usually the financial institution is going to mandate that you cover the collateral. So you're going to have comp and collision.
100% of the time.
Yep. And if you don't, a lot of times they will just add that into your loan because they will.
And your car payment will go from, let's say it's $300 to $395 a month.
Yeah.
And you won't even know it.
Or they call it forced place insurance, and that can be a couple grand a year.
It's expensive.
And all that's covering is just the damage. It's just covering the collateral. I shouldn't even say the damage to the car, because if you owe $5,000 and the car's worth $12,000 and it gets totaled, they're just paying off the loan.
Correct.
You're out for the rest.
There's no liability on it.
Yeah, no liability for when you hit somebody else. So
correct.
Not a way to do it effectively. But we look at the cost of the comp and the collision when your vehicles are dropping in value. If you got that $7,000-8,000 car, that just depends on the person, right? So I know that in the past, when I've used that vehicle. So if it got wrecked, I would just be done with it and get something else, but that's hard to say. Like, if somebody just bought the car and they don't have the ability to go out and buy another car next month, if that car did get totaled, they probably need to have comp and collision.
Agreed.
Everybody, everybody's different on that.
Well, and it also, there's, the cost benefit analysis. Like, for instance, I'll throw it out there. I've got a 2009 Chevy Trailblazer. I could remove comp and collision from it. I still carry full coverage on it. The vehicle is typically, it carries my son's sports equipment. It is a sports car is what I call it.
Yep.
And it stinks, but I carry comp and collision on it because it means a lot to me to have that vehicle. And so if it was totaled, I would want to get some money from it. But the other part of it is it ends up costing me about $170 a year to carry full coverage on that. Not crazy money. I'm not saving a lot of money to go down to liability. Now, when my son turns to driving age, that's going to be his vehicle. And then you add a 16-year-old driver to a full coverage vehicle. That now is going to cost me, instead of $170, that's going to cost me, $600, $700, $800 a year. That's substantial. The vehicle's worth $3,000, right? So the math on that tells me I'm probably going to drop that down to liability when he gets driving. And if he wrecks it, he's walking.
Yeah. I have 2 boys. I live by that same motto when I had liability only on theirs, and I explained to them what it meant. And, I get it, because I did not go out and buy my son's Lexuses and anything like that. They had Hondas and Kias, buddy. They were not new.
And he'd better go get some air fresheners, because that thing has had catcher equipment in there for a while.
That's not. Oh boy. Okay, so now we're off to a Febreze commercial, sponsored by Febreze. All right, guys. So we've gone over quite a bit today, so we'll kind of wind this up. So, how does choosing a higher or lower deductible affect my auto insurance premium and out-of-pocket costs? So we'll kind of let you guys wind it up by kind of telling us the deductibles, and because that's something we haven't talked about, and how much it really affects your premium cost.
Gotcha. Go ahead, Jeff.
The higher deductible, the lower the premium is going to be. So, I personally carry 1,000 on mine. Just I wouldn't turn in. Saves me money on my premium, but also if I had a $800 claim with a $500 deductible, I would not file a claim to begin with, just because all claims do rate and make a difference. So, just why would I pay the insurance company more money to have a lower deductible and then not turn in those claims anyway? Doesn't make a lot of sense. So, I manage my personal policies with a $1,000 deductible. But again, you're going back to, if somebody doesn't have $500 or doesn't have $1,000 readily available, then probably you better go with the $500 deductible. Because if you do wreck your car, the body shops they're going to want their $1,000. They're going to want their deductible money. So if you can't pay it, that's a problem.
Well, there's also typically a scenario where with each company, you might have a sweet spot deductible where you're looking at the difference between 250 and 500, negligible, but that 500 to 1,000 makes a lot of sense to do. The 1,000 to the next level is either 1,500 or 2,000. It saves a little bit of money. So what you want to do, and what I'd look at, is how many years would it take if I had a single claim to make up the difference, right? If I go without a claim for a full year, going from the $500 to $1,000 deductible, that makes sense for me to do. If it's going to take me 3 years to make up the difference in that singular loss that will happen in 3 years, that doesn't make any sense. So if I can save $350, $400 a year going from that 500 to 1,000, I'm probably going to do it. If I'm going to save $150 a year, well, geez, now I have to go, into that third year without a claim to make up that difference. So that's a way I kind of look at things too with deductibles. Sweet spot.
Last thing, my only interjection is on this. If you are financing, if you have an auto loan, check with your bank to find out what the requirement is, because I have had people that have had $1,000 deductibles and their bank requires a $500 deductible. And I, being a finance manager, have had auto deals come back to the dealership, and it says, we will not finance this until your person gets this insurance. And it's so always check with your finance company to see if they have a requirement as well.
Absolutely. Yeah. I mean, when you sign a contract, you're bound by contract, right? So you have to know what you signed and what you're getting into. So then that's the insurance company to do whatever you want. Right?
Yes, exactly.
You want a 2,000, we'll go 2,000. That's not a big
no worries.
Yep.
Look at me contributing something important. Yay.
What does the finance carrier want? Okay, they're saying you have to have 500. So that's what you signed. So
I feel so good that I actually contributed.
You did
rather
great.
than just ask a question. I feel smart now, guys.
I appreciate it too, because that is something that people don't even think about. They're like,
I know, but yeah. So I think we're gonna end on that note where I'm the smart one. We all know that's not true, but it's kind of fun to laugh about. And you guys, as always, super informative. I look forward to the next time we sit down so that you can make everybody kind of wonder, scratch their head, scare them a little bit, but you know what? Once they get a little nervous, call the guys at Absolute. They're happy to help you out. They'll take a look at all your policies and make sure that you're covered the right way for a fair cost, and make sure you're not over or underinsured and that things are the right way for you.
Sounds good.
Absolutely.
Thanks, guys.
All right.
We'll talk to you very soon.
All right. Bye.
Thanks.
Take care.